Well, g'day Marcel, great to be with you to talk about Dromon Asset Management, the new business that we've set up in the world of funds management. What we're about here is addressing the fact that ESG strategies in the investment world have over the last 15 to 20 years been thrust upon the globe and investors and fund managers, and we've got a few things to say about that today. I guess this was done firstly without consultation with the investment community, but particularly important, it wasn't done with consultation about what investors thought about it. I mean, it's their money. You'd think people would have actually asked them how they wanted their money deployed. It was meant to actually protect the environment. It was meant to deliver superior returns. Well, maybe it did in terms of the environment, we don't know. But what we can tell you is that it hasn't delivered superior returns. And there's been 15 years now for that track record to come through if it was doing what it was meant to do. But I think perhaps one of the most fundamentally problematic issues about all that is the breach of the fiduciary relationship between those who are investing and the fund managers themselves. I mean, we believe, and we run businesses right now, I run Arcana Capital, which has a financial services license, invests in commercial property, and you run Arminius Capital, which is a global macro hedge fund, again with an AFSL. We both believe that we've got a solemn responsibility to maximise return for investors. But the ESG mantra says it's about stakeholders. You know, the person who's handing over their hard-earned is just one of a group of stakeholders. We think that that's wrong. It is a breach of that fiduciary relationship. So we believe that there is actually a better way. There's a way to actually maximise returns, and it is actually not the ESG way. So what do you say to that, Marcel?
I mean, the belief in the industry, and I'm speaking as a practitioner here, someone who actually manages money, who wants to maximise the return to the investors, is that if ESG was going to work, it has had ample sufficient time to demonstrate that it could work.
10 to 15 years, yeah.
Which is more than sufficient, and it has not. And the data is now beginning to bear that out. That again, the mantra that was thrust upon the investment community from around its genesis was around 2004. And Campbell, I can attest to the point, having been in the industry for almost 30 years, that across the last 3 decades, neither myself nor other industry colleagues who also run hedge funds and manage funds, we were never consulted as to, do you think that this is a good thing for your investors? So again, as we say, it started off being well-intentioned as to whether it could deliver objectives for the environment, but from a funds management perspective, and the point that you've touched on, which must be at the forefront of everybody's mind, is that when an investor comes to a wealth manager, to a fund manager, they want the maximum return achievable that fund manager can deliver. And what ESG philosophy has done to the fund management community is it's effectively tied one hand behind the back of the fund managers, right? So
because it's saying literally you shouldn't invest in certain things.
Well, it's saying you can't.
You can't. Yeah, that's black and white, isn't it? Yeah.
Which is, again, as you say, if the industry is beholden to a fiduciary standard, which we believe it absolutely should be, then the philosophy is prohibiting us. And I mean, so we have developed with Dromon Asset Management, we have developed a quantitative systematic hedge fund that will attempt to address what ESG has done, which is the misallocation of capital. So it's taken capital away from certain unloved sectors of the economy, of the real economy, and in the GICS sector classification, these are industries such as coal, such as oil and gas, and other industry subsectors that actually generate, that manufacture stuff, which is a technical term.
Well, I mean, it's like this in a Western industrial economy.
Yeah.
We're going to need, for example, gas to produce fertilizer, for baseload power, peaking power, but we're going to need gas to produce fertilizer to grow crops and feed the world. I mean, to say you're going to turn your back on gas is pretty bizarre.
Yes, well, it's both from an investing perspective, it's foolish because you have literally left returns, and I mean, 2022 bore truth to exactly what we're speaking about. I mean, Whitehaven Coal, if anybody owned Whitehaven in their portfolio, despite the screams and protestations of the ESG community, Whitehaven Coal returned over 300% to shareholders last year.
Extraordinary, isn't it? Yeah.
New Hope, Peabody in the US, and again, obviously, an entire array of oil and gas companies that returned around 90% in 2022. So, in developing the investment strategy behind Dromon Asset Management, what we are attempting to do is identify both stocks and commodities in global markets on listed exchanges that are unloved, for want of a better term. And the reason why we use the phrase unloved, it is because it is the physical manifestation of the misallocation of capital that ESG necessarily imposes upon the funds management community.
So what we've done is we've created the real fund, resources, energy, assets, laissez-faire, and we'll be deploying capital for our investors in a way that maximises returns for them. So if you're a wholesale or sophisticated investor, if you're interested in ensuring that you do maximise returns as opposed to having your hand tied behind your back with ESG strategies, we'd love to have a conversation with you. So please have a look at us, dromonassetmanagement.com, and we'll have a great conversation about maximising your wealth.
Thank you. Take care.